Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our weekly stock market analysis for the week of June 16th. Coming off of huge moves last week in overall indices, we've seen a big week of nothing with the overall markets in equilibrium, with price action across all major indices less than 1% change noticed week over week. Markets for 5 days consistently straight, which is a strong anomaly, showed range-bound action for almost 5 full days. This highlights a strong push-pull action between the bulls and the bears, as we can see here around this high volume node, roughly about $289, $290. We saw a significant amount of volume pretty much all throughout the week. This could be an indication of a bearish reversal downward in the market. However, this could all be thrown out of the water, so to speak, if we see some changes come this Wednesday with the Federal Reserve looking to potentially reduce interest rates. If that does happen, we will see a continued move upward. However, this particular pattern, on the average, we see a little bit more reversal back downward. Now, we do anticipate the Federal Reserve to not raise interest rates. However, anything could happen. So both the bulls and the bears are battling back and forth with the possibility of either of these two scenarios, either they raise or they don't raise, would cause a larger reaction in the overall market. Now, if we look at the S&P on the weekly chart you have in front of you, again, we have seen price action pretty consistent, moving nowhere throughout the week, coming off of this large week previously, and we hope to see some follow through from a bullish perspective, but we clearly did not see any type of follow through. Now, the odds are in favor of a potential move upward, but the patterns clearly showcase that there are strong indications of reversal back downward. So most of the week on the S&P, we're going to keep our powder dry and have no trades on going into this week, in conjunction with the overall futures rollover this week. Typically is a little bit more volatility. However, if there are any indications of the Federal Reserve making a larger move, as we stated earlier, and if there are a movement closer to China tariffs, we do anticipate a larger move upward. So we do want to have some free opportunities to potentially catch a move upward. But we're really hesitant with a 50-50 probability of the market going either upward or downward at this point. So we will wait and see exactly what happens through the rest of the week. As we move on to the tech-heavy NASDAQ, again, no major price movement up or down, relatively range-bound over the last 5 days, but a clear test of our value area high, which in a very, very solid rejection of price action indicates a bearish move with a potential push a rotation back down to the 178 area, which is our next largest volume node at the point of control. Again, if there are changes with Federal Reserve and tariffs, anything can happen with this moving right back up. Again, watching the NASDAQ, we will have no trades coming into this week. As if we move now to the IWM, the Russell 2000, we have seen a pretty consistent movement of value downward week over week from 173 from a value area high perspective all the way down to 167, which is a significant move, as we have seen equilibrium imbalance across the board for all indices. We have seen this within the IWM as well, and we have seen a migration downward from 149 level all the way to 142 from a value area low perspective. Now, again, this does indicate a potential bearish move. However, again, we are not going to have any trades coming in this week with the potential reversal from the point of control at roughly about 153, back down to 142 with a longer term position. However, this week we will not have any trades on the IWM, and that also is consistent with the Dow 30, the DIA. No change in value area, a clear touch of the identified resistance level of 263 and a nice rejection. However, we have seen, which reiterates and magnifies the push-pull aspect of the weekly chart, we've seen a nice clear bounce off of the 20-week EMA, and that could indicate a potential reversal from a bullish perspective. However, again, we're going to watch and keep our powder dry going into this week. So we're going to try to keep this video really short this week. Again, strong push-pull action, which indicates an equilibrium balance between the bulls and the bears, and we will see what happens next week. As always, thank you for watching. If you have any feedback or any comments, please don't hesitate to post them in the body. We always are looking to improve. And keep in mind, it is your money and it should be under your control. Take care.